Alrighty guys, what is going up? I hope you guys are all having a great and an amazing day today. Now in today's episode, we're going to be talking about how I plan on building a dividend portfolio that pays us $1,000 per month. Now you might be asking, Carter, is that even possible? Has anybody even done that? And yes, people actually get paid over $1,000 per month just to own stocks. Now, just to put things in perspective, Warren Buffett just from Apple gets roughly $885 million per year just from dividends. Just to put things in perspective, that is a lot of money. And guess what? He's not working for it. He's just letting that dividend income roll in and then he's reinvesting it. So I'm going to be going ahead, starting out with roughly $630 or so. We're going to be talking about the stocks that I plan on buying, how I'm going to be finding stocks, the broker I'm using. So hope you guys enjoy it. Roll the intro. Let's go. Bam! Now the broker for this challenge that we're going to be using is TD Ameritrade. I know I made a video really explaining why I would never use them for day trading again, but overall as a dividend in a long-term stock portfolio, I think TD Ameritrade is going to be just fine. I think they're going to be around for a super long time, so you don't have to worry about all the money's insured, so if they go bankrupt, I still get the money, it's not a big deal. I know that you can easily buy the full shares, and then when they do pay the dividend, you can get it easily reinvested back in the stock, and then that money is gonna make you more money, and it's just gonna be compounding your money, and you're just gonna be sitting there making a lot of dinero. But overall, the reason why I'm kind of going at these dividend stocks is pretty simple. Dividend stocks perform better in a falling market and a thriving market. The reason why is because people are more likely to hold a stock that's paying them either monthly, quarterly, or semi-yearly, or yearly. Just because imagine if you're sitting back, relaxing, the market's crashing, but you're still getting paid. So a lot of these companies actually do perform a little better when the overall market's just kind of going to crap. Now what's cool about this series here is we're going to be posting videos maybe once a month or twice a month, not very often, but the idea is pretty simple. I want to get you guys engaged into my investing and my trading. So I figured I'm going to be doing a weekly poll on the community tab on my channel, and you guys can pick a stock that you guys see value in, and then I'll take a little bit of my money and invest it in them. I know a lot of people on YouTube, even myself the other day, was kind of buy stocks, they're cheap, but I kind of wanted to change it a little bit and make it a little more fun for you guys, so you guys can help me out with these series, and it'll be a cool little thing with everyone. So we're going to be going ahead, turning to the computer, and we're going to be looking at the stocks that I have right now that I bought today, stocks that I plan on buying, and then how I'm going to be finding stocks and literally kind of using certain criteria to go ahead and go about it. So let's go ahead and start with finding stocks, and then we can go ahead and look at the stocks that I own. So how we're going to be finding stocks is pretty simple. We're going to be going ahead and using either dividend.com or even the TD Ameritrade has a dividend screener that you can use. But the couple of things that we're going to be looking for is a stock that has paid 10 plus years of dividend payouts. Now the dividend payouts have to have slowly increased over the past 10 years. Just to put things in perspective, if you go ahead and look at NLY has been paying dividends for more than 10 years. Each of their dividends has gone up in value, so you know they always pay their dividends and they always pay more per year. That's another thing we look at. Now the second thing that we look for is the P to E ratio. So this is price to earning ratio. We want them kind of under 25 to 20. Now even that's being a little conservative, and I'm sure a lot of you know what that means, but overall, the last thing we're going to be looking for, we want them to be a good company. We don't want to invest in a company that's just going to crap, and overall our asset, our money is just going bad, and who knows, they probably won't even pay us a dividend in the future. But we want to just sit back, relax, have this income coming in, reinvest it, and keep reinvesting it. So let's go ahead, turn to the computer so you guys can see the stocks that I have right now and kind of how I'm looking at my screener and such. So these are the stocks that I do have right now. This is the TD Ameritrade income estimator. So you guys can see on average how much money I would get per year just from holding these stocks and not doing anything. So you guys can see I do have 12 shares of NLY, 1 share of VNQ, 1 share of O, 1 share of Maine, 1 share of Disney, and then 1 share of Visa. So you can see it's roughly $621, and my estimated annual income is somewhere around 23. So just from letting my money ride, letting my money sit, I'm going to be getting paid $23 and some change just to let my money grow. So you guys can see they have it already planned out. So one of my biggest months is going to be July, where I get roughly $5. Obviously, this might be a little more just because I am going to keep investing anywhere from $300 to $500 per month into this account. So all these should gradually start going up and start making me more money. A lot of the ones that I really like are VNQ. I think that's Vanguard's real estate fund, or RET. So they do pay it quarterly, which is pretty cool. Another thing I like are these monthly dividend stocks. These monthly dividend stocks are really helpful just because each month you know you're getting money coming in and you can easily reinvest it. So you guys can see that you guys can go ahead and obviously change these to however many you plan on getting, but I do own all of these right here because you guys can see it's from my trading account position. So you guys can see that 6 of 6 of my investments paid dividends. My estimated monthly average is roughly around $1.95, and then the dividend yield is 3.76%, and that's not too bad just for letting your money sit and not doing anything with it. So let's go ahead, turn to the screener so we can actually see how I plan on finding stocks. So you guys can go to dividend.com, you guys can go to screener right here, you guys can go to best dividend stocks and kind of just go about it like that. You guys can go ahead, filter out all of these stuff. You guys can upgrade to the premium. But what's cool is you guys can clearly see the share price, the annual dividend. So you guys can see that this pays a 50% dividend just for letting your money sit. Now, obviously, we would have to go through, do more in-depth criteria, screening, just to make sure we want to have it, the P/E ratio under 25, and all of that other stuff. But this is a very useful tool so you guys can see the annual dividend for the stock and all the other ones below. Another cool thing about dividend.com is you guys can see the best dividend stocks that they have. So you guys can go ahead and if you want, you can upgrade. I wouldn't, just because they do show you the top 3, but overall it's a pretty cool little feature that they do have. All right, so that is it though. Hope you guys enjoyed the episode. I'm super excited to go on this journey with you guys. So go ahead, go to the community tab. There's going to be the first post there. Let me know what stock you guys chose and why. It's all greatly appreciated. I love you guys. And if you guys gained some educational value out of this, let me know with a huge smashing the like button. Do what you guys do. That's greatly appreciated, so it helps me out with the YouTube algorithm. We'll see you guys tomorrow in another episode. Remember to always stay happy, stay positive. Take care. Have a good one, guys. Bye.